Hello traders, and welcome back to my YouTube channel, IPDATrader. Now in today's video, we are going to be talking about smart money entries, right? We're going to be focusing just on entries. We're going to be covering the different entry types there are, what are things you need to consider when actually looking at market executions, and things of that nature, right? I'm going to be trying my best to cover that topic with as much detail as possible. And if you're essentially struggling with that, I think this video is going to be functioning very well for you in terms of being able to understand what are the different options you have when looking at taking entries at specific POIs. So before we actually get into that, I just wanted to quickly thank each and every single one of you for 20,000 subscribers. I gladly appreciate that. I receive comments on a daily and from people telling me how the YouTube content is helping them with the trading. They're starting to slowly but surely see a change, also on the psychology side of things. So even though I do not have the time to answer most of the messages, I still wanted to take the time over here in this video to thank each and every single one of you, and I appreciate those of you who actually tune in, watch the videos, apply what I teach, and sort of see the results slowly coming in. So without any further ado, and with all that being said, once again, smart money entries is the topic for the video. So we're gonna get started right away. So traders, we're back on the drawing board as I usually like to do in this channel. And as we said before, the focus of this video is going to be smart money entries, right? We're going to be covering everything there is to entries, and you should have a very solid foundation when it comes to entries as you leave the video, right? So we're gonna get started over here, and we're gonna start talking about one of the entry types, which is known as a risk entry, right? I'm sure you must have heard this term before, and this is one of your entry types that you can implement if you actually want to trade smart money concepts, right? So for those of you who don't know, a risk entry is basically, let's say as an example, we have a market of this sort over here, and you're looking to take an entry over here. If you decide to place a buy limit right at the open of the block, or the 50% of the block, or a block refinement, whatever it may be, if you decide to place a buy limit over here without looking for any sort of confirmation, whether that comes in the form of order flow, Wyckoff, breaks, whatever you want to call it, if you decide to just take an entry as price is tapping into your block without looking at the lower time frame for confirmations, that is known as a risk entry over here, okay? And the expectation when you're actually taking a risk entry is for price to tap your order, right? And to move in a way that you've anticipated, right? Meaning you're, in this case, expecting price to push to the upside. And once again, you take a risk entry based on your market structure, timing, liquidity story, and POI selection, right? Those are the different criterias you must fulfill. And we're going to be getting into a little bit more detail in terms of risk entry, but for now we're going to be talking about the pros and cons of that. So obviously a pro of taking a risk entry is that you will never miss a trade by waiting for a confirmation, right? Because you're not waiting for a confirmation, which makes this trade risky. So that's why it's called a risk entry, right? You will not miss a trade. Now, secondly, another benefit is that you can really mold your RR in that position as you would want it to be, right? As an example, if you want a tighter RR, then you can use a risk entry, maybe at the 50% of the block, with your stop loss below the POI invalidation point, because you know, once again, if price happened to trade below your block, you know that that trade idea is completely invalidated and that you should essentially get out of the trade, and that's why you have a stop loss below that, right? So if you want a tighter RR or a bigger RR, you can always mold that around your block, right? You can say, okay, so I'm looking for a 5 pip stop loss, so that means my risk entry should go at this 75% mitigation of the block, right? Because I want to have a 5 pip stop loss, and putting my and putting my buy limit in this case at the 75% of the block will allow me to have the stop loss, to have that 5 pip stop loss that I'm looking for, right? So you're free to frame your RR in that case, right? Free to frame your RR. That's one of the benefits of your risk entry, right? Now, let's talk about the disadvantages of risk entry, because obviously there are also disadvantages, right? Just like with anything in life, really. So we're gonna get rid of some of the drawings over here. Get rid of that, and we're going to talk about the disadvantages. So obviously, very straightforward, very easy to understand, because you're not waiting for a confirmation, right? There is always a probability, and let me actually redraw this a little bit better so I can have more space to the right. So we're going to do this. So because you're not waiting for a confirmation, right, there is always a probability that price will just tap your block and continue dropping further down, maybe seeking some liquidity, maybe looking for some imbalances fill, maybe looking for a tap into a deeper block, right? There is always a probability that your position is going to get stopped out when it comes to risk entries. And truthfully, you will get stopped out more than if you didn't use a risk entry. And that's where we're going to be talking about the next entry type. But for now, understand that if you use risk entries, since you're not waiting for confirmation, if your POI is wrong, you will get stopped out, right? At least if you're applying some sort of risk management, meaning you're placing a stop loss, which you always should, right? So that's definitely one of the cons, let's say, right? One of the disadvantages of a risk entry, which is you're not waiting for a confirmation, you're not waiting for confirmation, higher chance of POI invalidation, right? Those are things that you want to consider, right? And saying this, I'm not essentially saying that you should never use a risk entry, right? Because now we're going to get into a little bit of the detail, right? So now you may be asking yourself, when do I want to use a risk entry? And in my experience, trading for quite some time now, you want to use risk entries at origin blocks more often than not, and you want to try and pair that with a high volume time, okay? That's going to be a very good opportunity for you to try and execute a risk entry. I'll repeat it once again. You want to try and take a risk entry. Your best bet will be at a origin block, right? Origin block plus high volume time, right? That's going to be a good opportunity for you to try and take a risk entry, which you don't have. You don't have to do that, right? It's a probability only. You could use that, and my suggestion is, if you're planning on risk entries, you want to pair that with origin blocks and high volume time, right? As an example, let's let's get some things ready over here. Let's say this is once again your market, whether that is your USD, GU, GJ, doesn't really matter, right? And let's say you're looking at multiple POIs right over here. You may have this one, you want to see what we do, this one, and this one, which this one over here, right? You see the arrow is your origin block, right? So When it comes to risk entries, you want to use that, as we said before, at origin blocks, which in this case would obviously be over here, right? So instead of taking a loss over here, with a risk entry, right? Because you place a buy limit, maybe price consolidates, but ends up dropping and blowing you through. Same thing over here, right? Because price will sometimes seek internal liquidity to target that external point, which is something that I will cover in a future video. But for now, once again, risk entry, right? Risk entry should only be used, please get that through your head, at origin blocks, because that's always your best block to try and trade. And if you're convinced based on your structure and liquidity that this is the block that is gonna hold, then feel free to take a risk entry over here, right? Take it over here at your origin block when the market's moving nice and you have that conviction that, hey, you know what? We've broken structure to the upside. We've been clearing internal liquidity. I think that price is seeking that external point, and that once we do that, we will have a probability of targeting. Maybe you have equal highs over here. Maybe you have Asian highs over here, right? Essentially, you're looking for a, how do I put it? You're looking for a target in the opposite direction that makes sense and is in line with your overall structure and trend. So with that being said, I think that's everything there is in terms of risk entries, right? Remember, your key to risk entry is to always use it at the origin. That's where you're gonna have your best probability of having a profitable trade in terms of risk entries. Otherwise, it can get very frustrating seeing your buy limits getting stopped out constantly because you're taking POIs that are essentially in the middle of a leg, which is not ideal, right? Let's just put it that way. It's not ideal. So we're gonna move on now. Okay, we're gonna be talking about confirmation entries, which is your other type of entry that you want to understand very well, right? So let's do that. Let's do that. Delete that. Okay, I didn't want to get rid of that. That's good. So now we're gonna be talking about confirmation entries. Okay. So let me take a second over here. Confirmation entries, right? So as the name says, it's very straightforward, right? Let's use a bearish example this time. Let's say we had a market like this. You had a break of structure over here. Price is making its way to a POI. Maybe you like let's see, an IFC structure that you have at this point, right? This, if you actually wait for some sort of order flow shift or wyckoff or whatever it is, that would be considered a confirmation entry, right? You are essentially zooming in into a lower time frame in your POI and looking for some sort of shift in market structure or whatever volume, whatever you use, right? I see there's different things that people use. So as an example, let's picture this, right? So this is in red, your 30-minute frame, right? So now in green, you have your 1-minute price action, right? So price taps your block right over here, and now you're excited, right? You say, oh, this is great. I've been waiting. We're now finally here. Let's see what we do, right? And what you will find is that taking a confirmation entry, right, it once again varies across different traders. But for me, really, a confirmation entry is just seeing order flow shift from bullish to bearish. That's what's going to signify me that we're now confirming our bearish bias, right? Maybe you want to track and see, okay, so how did price get into my block, right? Maybe you have a break over here and you decide, okay, this is awesome, right? Look at this scenario over here. We had liquidity creation, liquidity grabbed, break in market structure, higher time frame order block, POI, whatever you want to call it. Timing is also good. I want to place a confirmation entry, which is also a sell limit. Maybe sorry, that's the wrong tool. Let's use blue. Maybe you decide to place it over here and say, hey, this is great. We've now confirmed, because you've been patient and you've waited, that this POI is likely to hold, and I want to target this external point on the higher time frame, because what do you know? What will you find over here? Well, obviously you will find some sort of POI. So you can try and see if you can take the sell over here to clear, once again, internal range liquidity, to take that into the external point right over there. Okay, so that is your confirmation. So in terms of pros and cons, obviously very straightforward. One of the pros, you are actually waiting for order flow in your direction. So so your entries will have a higher probability of success, right? Because you've waited, right? If you were to take a risk entry and price decided to blow through this area because it's looking for this one over here, right? Then you would have got stopped out. Now, if you didn't do that and you wanted a confirmation and price, let's keep that POI on top. If price just moved up, maybe retraced, but never really broke any sort of order flow, it continued pushed up, guess what? You saved yourself from a losing trade by just waiting for some sort of confirmation, right? You decided that you want to see order flow shift in your direction, and if that doesn't happen, you don't trade and you wait for your next area. That's the approach that you should take. Now, if price does do something that you like and shifts now to a bearish leg, then you want to be 100% sure that you want to execute, and you should not panic, get scared, because I see that issue too, and you should be ready to hunt that trade to try and take that all the way down. You want to look if there are imbalances, if there's trendline liquidity, right? You have to be pairing it with everything that you know. And that's something that's gonna help you when you actually try and take entries, right? So let's obviously list a little bit of the negatives of a confirmation entry, right? So confirmation entry, let's say cons, you will miss trades by waiting for confirmation, and you need to be okay with that. Right? Understand this very well. There will be times in the market where you've been waiting for 2 hours for an area to hit. That area has now been tapped. Now you're zooming into lower time frame. You waited for confirmation, right? Let me actually do that. So let's get rid of this. And you see that confirmation, right? Whatever you use, Wyckoff, order flow, I don't really care. And now you just say to yourself, great, I want to take a sell, right? This is what my plan tells me. But instead of having a pullback that sort of goes up enough for you to execute, it just keeps dropping, right? And now you miss your trades and you wonder, why did this happen to me? Why didn't get in the trade? Well, it's because you were a disciplined trader and waited for your confirmation. You're not always going to be part of a move, right? Calling a move in terms of it's gonna go there, it's gonna move to this level over here, it's not enough. Sometimes the market won't allow you to enter that position, and you need to be okay with that, okay? So these are the two different types of entries that I mainly use. I focus on personally, and you're free to do whatever you want, but for me, I focus on confirmation entries, and I may take a risk entry at a origin block if the timing is right, if my liquidity story makes sense, if the structure that I'm following is I'm very sure that it should play out based on probability once again, right? So that's everything that I wanted to cover today in terms of smart money entries. You have to learn to understand these two different types, right? Risk entries and confirmation entries, and you have to know when is it better for you to use a risk entry, and when is it going to be better for you to actually wait for confirmation, right? And I just sort of covered the example of a bearish shift in terms of your confirmation, right? If you want to use candlesticks as confirmation, that's perfectly fine. Maybe you find that, hey, after two bearish engulfing candles on my POI, it usually just keeps dropping, and I want to sell over here and continue lower, then that's great. But for me, I use order flow and order flow reading and things like that, right? So with that being said, that's everything that I wanted to cover today. We're going to be jumping back into the charts rather quickly so that we can take a look at a different examples, right? So I'm gonna pause the video for a second. We're gonna go back to the charts and we'll continue with the recording. Okay guys, so for this last segment of the video, once again, we're gonna be covering what I've just explained to you guys, and what a better example than actually a trade that I'm currently in, which is a GBP JPY sell, right? Based on this origin block over here, I've decided to take a risk entry because it's essentially part of my plan, right? And that doesn't mean that I'm not gonna get stopped or that I always win. That's not the case at all. But this position over here, which is the refinement of the origin block, is a trade that I'm currently in, right? With my stop loss being a couple of pips just above the POI invalidation point, because I've seen cases where it just wakes up a little bit further and drops aggressively. So since I don't want that to happen to me, I've decided to give it a couple of pips just above to breathe, right? And as you can see, this is likely to get stopped. But once again, I'm not stressed about it because I'm following my trading plan. I'm well within my risk. I'm not over trading. I'm not over leveraging. I'm just essentially following my plan, and my plan dictates that based on the internal liquidity that has been cleared over here, we should be very likely to see some reaction to go further down. Now, that doesn't mean it's going to happen. This is just something that I'm comfortable with taking, and I just wanted to show you guys the example of a risk entry. As you can see, I've decided to do so only at the origin block. I would not have done it as an example at this POI over here. As you can see, would have just been a blowing through that. So I'm quite okay with how the position is moving, right? But just wanted to share with you guys that I do take losses just like everybody else, right? So once again, I'm not stopped yet, but it looks, from the looks of it, I might get stopped in this position, which is absolutely fine, right? But as you can see, I'm applying what I just told you. This is a fine area for me to look for a risk entry because it's an origin that was responsible for internal break. So this is absolutely part of my plan and valid, right? So I just wanted to share that quickly with you guys. A position I'm currently in. We shall see if this works out. As long as it does not trade above the POI validation point, this is still a fine trade for me to be in, so I'm not too concerned, right? So let's go over here to EURUSD, which is also an example of a origin block risk entry, right? So you can see you're combining origin block and risk entry. And as you can see, if you would have done that, you would have been in profit, right? Because your stop loss is below the POI invalidation point right over here. You can see price never invalidated that POI. And if you would have taken that at the open, you would have gone a tap, little bit of a drawdown, and now profit, right? You would have done the 50%. Once again, that's why I told you guys that based on how you want to have your RR, you can target the 50, the 75, whatever percent you want to use, right? So let's say you took it at the open and you're looking maybe for it to clear some internal liquidity. Obviously, your preferred target would be over here, but there's no guarantee that you're going to make it over there. But essentially, this would be an example of a successful risk entry at a origin block over here below liquidity, right? Very straightforward. Now, in terms of confirmation entries, not gonna waste too much time. This, as an example over here, maybe if you zoom into a lower time frame, you would have been able to capture a confirmation, because once again, this block to my left is not a origin block. So you don't want to take a risk entry over here, right? I would not have done that because there is a probability that we might target this block over here, which is a origin block, right? So let's see into the lower time frame. I'm actually kind of curious if we can go back that far. Let's see over here. So you can see we have some sort of liquidity engineering, right? Liquidity taken out, tap into the block. You can see pretty nicely shifts bearish, break structure, pulls all the way back down, back up, where into your origin block of the mitigation, and this would have been once again an awesome confirmation entry to take, right? So this would be an example of a successful confirmation entry trade where you want to still put your stop loss above the mitigation high, which is this high over here at 1.118 right? So that's essentially everything that I wanted to cover today. A little bit of a longer video, but I think there's full of value and information that you can take away. Remember, you can sign up for the mentorship by clicking the link in the description. For those asking, yes, it is a one-time fee. You will gain access to a Google Drive folder, weekly Outlook, videos every single week, a Discord community, and a lovely environment for the most part, right? So with that being said, guys, feel free to drop me video suggestions below. I will definitely love to read some. And yeah, with that being said, guys, if you made it through the entire video, thank you very much. I gladly appreciate you. And I will see you guys very soon. Take care, everybody.